Morning, Steve Ray in Chicago with the morning grain comment. So I guess the big news overnight is that the on-again, off-again talk about OPEC coming up with some kind of production deal may be on again. So we've got crude oil up $3 a barrel. That could be helping commodity prices in general. We also note that overnight grain prices are a little bit higher. Beans up about 7 cents, corn up 3, and wheat up about 4 cents. Some people feel that once the delivery mechanism of the December contracts is over, we're due for a little bit of a bounce, and historically the trend in corn and beans tends to be a little bit higher after the December 1 lows. As far as the deliveries are concerned, 3 meal, 1,315 oil, no corn, 814 Kansas City wheat, only 2 Chicago wheat, 540 Minneapolis wheat, and 576 oats. Corn numbers were probably a little bit lower than expected, and where the cost of carry is, especially storage over the weekend, you might see some increase in deliveries as we go into the weekend. Yesterday, the 10-year USDA baseline acreage forecast suggested that farmers next year will plant 4.5 million less corn acres and 2 million more bean acres. So that's kind of in line with some of the soybean corn ratio on the futures, and also in line with some of the thoughts of other private guesstimates. 10-day forecast for U.S. Midwest is normal rains. We have our first snowstorm that's going to hit the northern plains and parts of the western Midwest in the next 8 days. And hopefully it doesn't leak into Chicago anytime soon. Brazil weather warmer, Argentina weather warmer and drier, and that's good for the crops down there. And rains are expected to return over the weekend. Traditional funds yesterday, sellers of 23,000 corn, 6 beans, 3 meal, 3 oil, and about 4 wheat. And we also noted that open interest in beans continue to go up. Another 14,000 contracts yesterday, gone up about 107,000 contracts in the last 6 days. It's interesting to note that in the Dalian futures, there's a lot of speculation as to whether or not this is a speculative trade or a commercial trade. But they trade 1 million contracts a day in corn, cornstarch, soybeans, meal, and also palm oil. But the soybean open interest has dropped dramatically, only about 400,000 contracts a day. So some people think that that speculative trade may have switched over into the U.S. soybean contract. So we'll kind of watch that pretty closely to see how much that continues, and if they decide to get out, what it means for prices. Continue to see fundamentals trying to sell beans and buy corn. So far it continued to not work. But the fundamentals suggest soybean prices are too high, corn still in trading range, and the wheat prices still reflect too much supply and not really trading anything as far as uncertainty for 2017. So again, crude oil is up, grains are mostly higher. It's the end of the month, and for the month, soft wheat prices were down about 23 cents. Corn prices were down about 11 cents, beans up 35 cents. We had meal up $6 and soybean oil up about 190 points. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.